JPMorgan kicked off the first quarter earnings season for U.S. corporates, and it's a sterling report card. Earnings per share at the biggest U.S. bank by assets jumped 52% on year to $4.10 a share, and that beats estimates of $3.41. Revenue also exceeded forecasts, hitting a record $38.3 billion. Now, the bank shares soaring nearly 6% in pre-market trade, and rivals Wells Fargo and Citigroup also reporting higher profits as well. Now, for more, we are joined by Will Denslow live from New York. Will, thank you for coming back on the show with us. Pretty solid set of results from JPMorgan, Citi, as well as Wells Fargo. But what's the guidance amid the concerns of U.S. economy sliding into a recession?
Yeah, Roland, that's absolutely crucial, considering the fact that there has been so much volatility, not only when it comes to the banking sector, of course, with the collapse of Silicon Valley Bank and Signature Bank over recent months, but about the state of the general economy as well. Of course, in recent days, we've had more signs of robustness in the US labour market, with the unemployment rate down at 3.5%. We've also seen indications just in the past couple of days, Roland, of inflation ticking down, with the consumer price index and producer price index this week showing signs that price pressures are finally starting to ease. But of course, there do remain major headwinds for the economy. And that was reflected in some of the comments from JPMorgan's CEO, Jamie Dimon. Now, in comments he gave, he said that the US economy continues to generally be on a healthy footing. Consumers are still spending and have strong balance sheets. He said that businesses are in good shapes. But of course, JPMorgan's CEO has been cautious about the state of the economy for a number of months now, and that was reflected in his additional comments where he said the storm clouds that have been monitoring over the past year remain on the horizon. The banking industry turmoil adds to these risks. Now, JPMorgan, their pre-market shares were up in the region of 6% after those stellar earnings. But of course, the warning there from one of the chiefs of the big mega banks in the US is that the US economy is certainly far from out of the woods.
Well, pretty grim warnings there. But will it be a tale of two cities for the banks, so to speak? I mean, the so-called mega banks have benefited from the recent turmoil of depositors' attrition from the smaller banks. So will the mid-sized lenders, will the smaller lenders be facing a tougher time, you think?
That'll be absolutely crucial to look at. And I think for many investors, they'll be, for this particular earnings season, almost more intrigued as to what happens for the likes of First Republic Bank, that, of course, have been embroiled in this turbulence in recent weeks, as much as how the top and bottom lines for some of the big mega banks in the US have performed. Of course, First Republic is slated to release their quarterly earnings on April 24th. They've lost around 90% of its value this year alone. So, of course, the health of these medium and smaller banks could be absolutely crucial when it comes to whether the worst of the banking volatility is over. That, of course, will remain to be seen. Now, some interesting analysis that has been coming out is that customers are believed to have pulled out around $600 billion worth of deposits from their accounts in the first quarter of the year, considering that vulnerability. So the question is, are consumers flocking to the bigger banks, like you so rightly mentioned, Roland, or are they moving to other sectors to try and chase higher yields? Now, of course, big questions will be going forward. Will banks then in part have to start pulling back on lending, which could have a major impact on the US economy? So, of course, these are all things that analysts will be watching very closely indeed.
Well, thank you for all those details. That was Will Denslow reporting live from New York.